This is Nightly Business Report with Tyler Matheson and Sue Herrera.
You're hired. Job growth is strong, the unemployment rate low, but Americans are struggling to get bigger paychecks. Real jobs in virtual reality. The fast-growing technology could change the way a lot of industries do business and the way people work. Small cap, big gains? If you think blue chips are pricey, our market monitor says there are other alternatives that could pack a punch for your portfolio. Those stories and more tonight on Nightly Business Report for Friday, December 8th. Good evening, everyone, and welcome. I'm Sue Herrera. Tyler Matheson is off tonight. The Dow and the S&P 500 closed at a record. We'll have more on that in just a moment. But we begin tonight with what some are calling the strongest job market since the turn of the century. The economy created a healthy number of full-time positions last month across a broad range of sectors. Non-farm payrolls rose by 228,000, making this the second month in a row that gains have eclipsed 200,000. The unemployment rate held steady at 4.1%. But closely watched wages fell short of expectations, rising just 0.2%. Hampton Pearson takes a look at the nation's unemployment picture and the mystery of those stuck wages.
November job growth was widespread, with professional and business services leading the way, adding 46,000 new workers. Manufacturing continues to rebound with 31,000 new hires, and repair work in hurricane-ravaged Texas and Florida helped boost construction hiring by 24,000. But solid hiring and an unemployment rate at a 17-year low is still not boosting wages. Up just 2.5% year over year, now averaging just over $26 an hour. Even President Trump's top economic advisor agrees wages are not where they should be. He says tax reform is part of the solution.
We're still not growing wages in this country. We do believe that tax reform will help us drive real wage growth in the United States, which is something really important to the administration.
The pace of hiring has slowed. 187,000 jobs per month last year to 174,000 per month this year. A key factor leading economists say in why wage pressures have remained low.
I don't think there's any amount of pressure you can put on this economy that's going to generate really strong wage growth.
The holiday shopping season is increasing the competition for new workers. Retailers added 19,000 new hires last month. And the boom in online shopping generated 10,000 new jobs in transportation and warehousing businesses. In Washington, D.C. and other major metropolitan areas, small business operators are competing every day to find workers.
Labyrinth Games.
Kathleen Donahue runs a game shop near Capitol Hill.
I need people who have experience with kids, who can handle a classroom of kids, but also have a deep understanding of gaming and how to teach strategy games.
A few doors down at a local Sprint outlet, there are plans to double the workforce, but the store manager is having a hard time finding qualified workers.
Many of the persons that are applying online, every single day go more for computers. They have to pass a test, and many other people they are applying online, they'll fail that test.
Meanwhile, the November job recovery has most Fed watchers anticipating monetary policymakers will raise key short-term interest rates for the third time this year at next week's Federal Reserve meeting. For Nightly Business Report, I'm Hampton Pearson in Washington.
Beth Ann Bovina joins us now for more analysis on the jobs report. She is the chief U.S. economist at S&P Global Equity Research. Beth Ann, welcome back. Nice to see you again.
Great to be here.
Take a look at this report specifically as it relates to wages. We listened to some of the sound bites in Hampton Pearson's report, and they're having trouble getting qualified workers. Wouldn't that push up wages? What's keeping a cap on that wage growth?
Well, we've been puzzled about why wage gains seem to be stuck at around 2.5%. Now, I do want to make a point that it's a lot better than when it was 3 or 5 years ago when it was negative in real terms. Mm-hmm. But we think there's a couple of reasons. One, you could say there's sticky wages. Sticky wages meaning that wage gains don't usually follow with a lag on when the economy strengthens. But it's been 10 years since the recession ended. We think what big factor is basically the skills gap. One one thing that I don't think was mentioned here is job openings are at record highs, yet the unemployment rate is at a 17-year low. We think there's a labor inefficiencies happening. Those vacancies aren't meeting the supply that's out there.
What about, does that also explain the participation rate, which is at a 40-year low? And does that equate with the move that we're seeing down in the unemployment rate? It doesn't seem to make much sense to me sometimes.
Well, that's one of the that's the other lump of coal in this otherwise relatively positive jobs report. Both wage gains being so low, and of course the labor participation rate that's still near a 40-year low. You mentioned that the unemployment rate was about 4.1%, and that was good. And the good news in that is that we saw both people getting jobs and people joining the workforce. But that wasn't enough to move the needle on the labor participation rate. That means that if you imagine all those people, now many of them won't because they're retired, but those of working age, if they return to the workforce, that unemployment rate would be a lot higher than what we see right now.
Does today's report influence the Fed in a way that allows them to raise interest rates? Do you think they will when they meet next week?
I think the Fed has indicated on many accounts, on many accounts that they plan to move next week. This just gives them one more reason to check that says that they're full steam ahead. However, we would like to point out, while they will also be concerned about those soft wage gains, and one of the reasons why is because their other mandate, not just job growth, but also inflation. And when inflation gets lower and lower, they may have to reconsider what they do next year. They have 3 penciled in, but let's see if it's less than that.
There are some people who are talking about disinflation. Do you buy that argument or not?
We at S&P Global are somewhat concerned about the lower inflation readings that we have seen. In fact, just in October, we thought the Fed would wait a little while, not raise rates in December, basically because of the inflation readings are so low. If you look at the personal consumption's deflator reading, core reading, excluding food and fuel, it's near 1%. The Fed's target is 2%. So we're kind of wondering why they're moving right now. And so one of the concerns, of course, is this low inflation readings that we're seeing.
Well, we will wait and see what they do. Beth Ann, thanks so much. Appreciate it.
Thank you.
Beth Ann Bovina with S&P Research. Despite job market gains, consumer sentiment cooled for the second straight month, but even with the slight decline, overall sentiment remains near lofty levels. According to the University of Michigan, stock market gains and economic growth have underpinned consumer optimism. The report also showed that expectations about future inflation have firmed up a bit. As we mentioned, the Dow and the S&P 500 both finished the week at records, helped by that better-than-expected employment report. That suggests to investors that economic growth remains on the upswing. So here are the closing numbers for this Friday. The Dow Jones Industrial Average advanced 117 points to 24,329. The Nasdaq was up 27, and the S&P 500 added 14. But it was a volatile week for the Nasdaq, which was the only major index to fall. Hours before the deadline for a partial government shutdown, the president signed into law a short-term funding bill. The stopgap, which, as we told you, passed the House and the Senate last night, extends funding levels for 2 weeks. It does not resolve the budget issues that exist between the two parties, but the bill buys some time for negotiations between Republicans and Democrats. President Trump declared an emergency in California and ordered additional federal aid to help with the fires that are quickly spreading through the southern part of that state. Aditi Roy is on the ground for us tonight in Ventura.
Day 5 of California's wildfires, and it's still not over. In fact, they grew overnight. Half a dozen fires now burning throughout Southern California. Tens of thousands evacuated.
Community's a little broken.
Rebecca Torres is the assistant manager at Barrel House 101, a local watering hole in Ventura, California, a seaside community that's borne the brunt of the impact of the latest wildfires. Torres says with so many people in town evacuated and so many downtown shops closed, their business is down.
We don't have that business right now, but we do have the business of people coming in that need that spot. So are we making as much money? Probably not.
Still, she is thankful that she has a home to go back to every night. Others weren't as lucky. For the homes that didn't make it, little remains. The shell of a car, the twisted metal of a garage door, or the charred remains of a washer and dryer. Drive through this neighborhood and you'll notice some homes turned to rubble while others escaped Mother Nature's wrath. The evacuated neighborhood no longer a ghost town as workers scurried about, making it safe for anxious neighbors to come back. We found about 200 utility workers gathered first thing in the morning, getting dispatched to cut gas lines to the homes. This as numbers are pouring in about the economic impact of the wildfires in affected neighborhoods. According to the online real estate site Zillow, nearly $10.5 billion worth of residential real estate and more than 14,000 homes are in the evacuation zone of the Thomas Fire. And in Los Angeles County, where the Skirball Fire threatened mega mansions, nearly $6.5 billion worth of homes are in that evacuation zone. For Torres, the devastation means a chance to turn her business into a community center. They're taking donations for the weary neighbors who land at their doorstep.
So we just wanted to be a spot where anyone local, should they be in need or have extra that they could donate, we could be like a little hub.
As to why we're seeing such an explosion of wildfires in the middle of December, fire officials tell us it's because the extended drought here in the state made things so dry, and the high winds certainly don't help matters. But looking forward to the weekend, the winds are definitely calmer. For Nightly Business Report, I'm Aditi Roy, Ventura, California.
Still ahead, we'll take you where the jobs are.
I'm Kate Rogers in New York City, and tonight on Nightly Business Report, we're going to tell you about virtual reality. It's more than just fun and games, it's actually creating real jobs.
President Trump had something to say today about Wells Fargo and dismissed reports that the Consumer Financial Protection Bureau will go easy on the bank. In a tweet, he said the, quote, fine and penalties against Wells Fargo for their bad acts against their customers and others will not be dropped, as has incorrectly been reported, but will be pursued and, if anything, substantially increased. I will cut regs, but make penalties severe when caught cheating, end quote. Wells Fargo has been accused of wrongdoing related to consumer practices. Well, when you think of virtual reality, you probably think of video games. But both virtual and augmented reality will likely have a big impact on numerous industries. And the fast-growing technology is creating a lot of opportunity. Kate Rogers shows us where the jobs are.
Jesus Noland grew up with a love of gaming and computers. At 30 years old, he's found an opportunity to combine the two, working as a developer in virtual and augmented reality.
It's a lot of fun, actually. The best thing about working in this field is being able to solve creative problems on a daily basis.
Noland is a developer at Eon Reality in Irvine, California. The company designs applications to help train workers in varying industries. For example, ExxonMobil has used Eon's immersive virtual reality platform to train operators and engineers in oil and gas production.
The VR and AR industry is really young, and so there's a great potential for new applications that need to be built by content creators.
Virtual reality replaces your reality, whereas augmented reality bridges the gap between the physical and virtual worlds. The U.S. is on track to spend some $3 billion on VR and AR this year. And the industry is seeking talent as the application of this technology spreads to medicine, transportation, education, energy, and other fields. Eon has grown from 90 workers in 2015 to nearly 250 today and is looking to hire an additional 100 workers like Noland.
We obviously look at people that have programming skills, that know how to build this type of rather sophisticated applications. And on the other hand, we're looking at people that know modeling, that know how to create these sophisticated 3D environments.
Finding workers with these skills is challenging as the technology is still in its early stages. That is why Eon has teamed up with several colleges across the country to help educate aspiring workers.
We hope, as we do this ourselves, that universities will pick up our curriculum and start expanding this new workforce.
Tina Chang is part of a training program at Lehman College in New York. Her prior experience includes broadcasting and work in an architectural firm, but she felt it was time for a change.
I found this opportunity to be able to re-educate myself.
Her coursework at Lehman includes coding, animation, 3D graphics, and web design.
I think the opportunities for augmented reality and virtual reality are huge.
The 11-month program cost under $600. Prior experience in computer science or coding isn't necessary to succeed.
There's a tremendous opportunity for people who are entrepreneurial. The most important thing is passion and creativity, because you could learn these skills.
And with the global VR and AR industries set to grow by 100% each year through 2021, that opportunity is only expected to become bigger. For Nightly Business Report, I'm Kate Rogers in New York City.
A unit of Caterpillar is paying tens of millions of dollars in fines, and that's where we begin tonight's Market Focus. A subsidiary of Caterpillar is getting hit with $25 million in fines after admitting to cheating customers for years by intentionally damaging rail cars in order to perform costly repairs. The unit was also charged with dumping the damaged parts into the ocean to hide the evidence. Caterpillar said it has taken corrective action against those employees involved. Caterpillar shares rose fractionally to $143.86. Honeywell is launching an $8 billion share buyback program. The industrial conglomerate said the new purchase includes more than $1.5 billion remaining from a previous share repurchase. Shares were up slightly to end the day at $153.66. Radius Health said it's seeing positive results for its breast cancer drug. The company said it now plans to launch the second phase of the study trial. Shares of Radius Health jumped 15% to $31.60. Denali Therapeutics, which specializes in developing treatments for neurodegenerative diseases, went public on the NASDAQ, pricing about 14 million shares at $18 apiece. Denali's IPO raised $250 million. The shares climbed 19% in their first day of trading, closing at $21.45. And Pepsi is moving its stock listing from the New York Stock Exchange to the NASDAQ on December 19th. The beverage giant said that move will give the company greater cost effectiveness and access to the exchange's services. Pepsi's shares were off 16 cents to $116.57. Well, need more evidence of ETFs' growing popularity? According to new research, more than $600 billion flowed into exchange-traded funds globally in the first 11 months of the year. That is 54% more than in all of 2016. The growth stems from the preference among investors for funds that track the performance of large parts of the market, but at a cheaper price. And our weekly market monitor says investors piling into ETFs have made large cap stocks overvalued. So he has the names of some small cap companies you may want to consider owning over the next 5 years or longer. He is Lamar Villery, and he is the portfolio manager of the Villery Balanced Fund. Lamar, welcome. Nice to have you here.
Thank you. Glad to be here.
You also make the point that some of these small caps tend to have less debt.
That's right. That's right. You know, generally speaking, these companies are in growth mode. So they're, rather than like a mature company that sort of takes out a lot of debt, starts paying a dividend, these companies are aggressively reinvesting in their businesses. So generally, they're not taking on a heavy debt load.
Let's get to your picks. The first one, you say they all have strong recurring growth revenues, and you want to own them for about 5 years, as we mentioned. First one is Axon Enterprise. Why do you like it?
Sure. So the name that you probably would recognize what it used to be called, which is Taser. They initially made their name in the non-lethal weapons, the Taser guns. What the real growth engine here that we like is their Axon business, which is their body-worn cameras, and more recently their fleet automobile cameras. So they sell these cameras to municipalities and then manage the data, because there's a massive amount of content created by this, and they have long-term contracts with these local police forces. In fact, New Orleans, where we are, Villery & Company's here in New Orleans. New Orleans was just one of the first customers for the fleet vehicle cameras, as well as the state of Louisiana separately just signed on. So we think there's a massive amount of growth opportunity there.
A little bit of a recreational play here. Pool Corp is the next one on the list. What's attractive about that?
Sure. So the great thing now, when you buy a pool or when you have a pool put into your house, you're not signing any long-term contracts, but you're basically signing off on a long-term spend. So pool is bigger than its next 52 competitors combined. So if you own a pool, you're a customer of Pool Corp. They're a distributor of all products. What they say is we sell everything but the water. So they will sell you, chemicals, a new pump, all those sorts of things. Once you own a pool, it's very unlikely that you're going to let it turn green or fill it in. So there's a very long life, very long-term revenue stream for these guys.
Next, and I hope I'm reading this title correct, 2U? That's the...
2U is exactly correct.
Okay, now I'm not familiar with this. Tell me what they do.
Okay, so 2U partners with universities in offering online degree programs, graduate degree programs. So while you haven't heard of 2U, you have probably heard of Yale, Northwestern, Georgetown, University of North Carolina. They partner with all these schools and more to offer fully online versions of their graduate programs. The nice thing about it is these are 10 or 15-year contracts. 2U, if you're a student, you pay full tuition, just like if you were in the bricks and mortar university. 2U keeps 65% of your tuition, which sounds crazy until you realize from these universities' perspective, they've never made money on anything before. They're actually making money, even though they're only getting 45% of the tuition dollars.
Right.
The universities actually profit off it, which is a crazy thing for them. So they love it. Very long contracts. They've never lost a customer, and they're adding on schools every day.
Lamar, we have to leave it there. Have a great weekend. Thanks for joining us. Lamar Villery.
Thank you very much.
With the Villery Balanced Fund. And to read more about Lamar's stock picks, you can find them on our website at nbr.com. Coming up, affordable luxury, fashionable jewelry without breaking the bank. It started as a bright idea. It turned into a lot more. The surge and volatility in Bitcoin was one of the week's biggest stories. Today was no different. The price fell today after having risen more than 40% in the preceding 48 hours. Some have attributed the crazy moves this week to the coming launch of Bitcoin futures on major exchanges. Bitcoin futures start trading on the CBOE on Sunday and on the CME the following week. Jewelry is often described as an accessory, and jewelry, especially trendier and cheaper fast fashion jewelry, is usually treated as an accessory business. As Tyler Matheson tells us, that's changed since two young entrepreneurs from New York City got the bright idea to start a company that makes fast fashion jewelry its primary business.
We knew that this earring was going to be successful within the first 48 hours of it going live.
Amy Jane and Daniela Yakubowski do their homework. How else could they have sold millions of on-fashion, hip, in-the-moment bangles, earrings, and necklaces for $30 to $250 apiece?
Within a few days, we'll have an idea for what she wants within that trend.
She is Bubble Bar's typical customer, someone not unlike New Yorkers Amy and Daniela.
We're really looking for that 25 to 40-year-old woman who wants on-trend novelty fashion jewelry.
The two began shopping together with abandon soon after meeting on the job in finance a little more than 10 years ago. They moved on to business school at Harvard, continuing their forays to places like Saks Fifth Avenue, where they found themselves in the summer of 2009.
Amy just turned to me out of nowhere and said, "Would you ever buy jewelry from this place?" And I sat there for a minute and I said, no.
The fact that the two of us had never gone downstairs and bought a pair of statement earrings or bracelets made us kind of question who was.
Aiming to figure out who she is, they began quizzing fellow students on their shopping habits and talking to wholesalers about turning product around, building a case to create a business, a brand around fast fashion jewelry. They put up about $20,000 each to build a website and began testing it after they graduated in 2010.
We started getting all of these orders from women that we didn't know. And a few weeks later, they were coming back and making another purchase.
It meant we were doing something right. She was loving the experience.
Tens of thousands of pieces sold that summer, convincing Jane and Yakubowski to open a real business. But pitching venture capitalists, more than 90% of whom are male, wasn't easy.
They really didn't get it.
The two kept at it, though, eventually finding women who not only got it, but invested too. BaubleBar opened officially in January of 2011.
You're going to be told no a million times, but you really only need one yes.
Graycroft's Ellie Wheeler was an early investor. BaubleBar won't say whether it's profitable yet, but Wheeler says its performance has exceeded her expectations.
They've done a fantastic job building the business, and it's a completely different business today, which it should be.
Different because BaubleBar, an online jewel, is now sold at Bloomingdale's, Nordstrom, Anthropologie, and some 200 retailers around the world. They've expanded, too, on the lower end with Sugar Fix, sub-$30 items sold in 1,800 Target stores, and on the higher end with a new line, Everyday Fine.
We do also have one that has letters in diamond, and that's $1,000. Pretty.
And a lucrative new chunk of the business is coming from other fashion companies, hiring BaubleBar to design products they sell under their own names.
That element of the business now is about 20%, 25%.
Quite a nod to these shopping buddies, industry outsiders who've really worked their way in.
Since 2011, BaubleBar has undergone several rounds of funding. Included on the list of investors is the venture capital arm of Comcast, the parent of CNBC, which produces this program. And that is Nightly Business Report for tonight. I'm Sue Herrera. Thanks for watching. Have a great weekend, and we will see you on Monday.